Now, earlier today, AT&T reported a 26% jump in fourth quarter earnings. The big driver, an additional 2.7 million wireless subscribers, largely because it's the only provider for the popular iPhone. So will Apple's iPad bring it similar fortunes? Well, joining us right now to help answer that is Mike McCormack. He's analyst over at JPMorgan Chase. Mike, good to have you here on Street Smart.
Thanks,
how
Joe.
crucial was it to AT&T to kind of be named as the provider here for the iPad?
You know, I think by most accounts, the device is not vastly different than the iPhone from an application standpoint. So I think it's obviously an indication of the strength of a relationship between AT&T and Apple. And obviously, they've had the iPhone now for about 2.5 years, and that's been a successful selling device on AT&T's network. So to the extent that that relationship is strong, obviously that's great for AT&T. But again, I think this device, not having differentiated features in a significant way, could sort of relegate it to more of a niche opportunity for both AT&T and Apple.
Right. We've heard from, various folks who track Apple that they say it may take some time to kind of ramp up on this device. So we kind of need to keep that in mind when considering what kind of impact this might have on AT&T.
Yeah, that's fair. I mean, I think from AT&T's standpoint, it's a low-risk opportunity to add new subscribers. As you've seen, I'm sure, relatively low selling price, so that could be popular. From AT&T's standpoint, having a limited data package for $15 or unlimited for $30 basically provides them with upside without really any risk, right? It's a prepaid offering, so there's no credit risk, very little investment up front for advertising, and obviously no subsidies. So all those things bode well from a profitability standpoint. The things we'll be watching for is overusage, frankly, where we've seen network capacity utilized for the iPhone, and there's been some notable issues in New York and San Francisco and potentially elsewhere. Obviously, this iPad, if it's quite successful, could exacerbate those issues.
Well, it's a good point that you bring up those network issues, because I believe at the press conference, our guys were saying that when the announcement was made about AT&T, that there was a little bit of a chuckle in the audience, considering the problems that Apple's had with the AT&T network, the iPhone specifically. I mean, do you feel like AT&T, Mike, is taking the right steps to address those problems with the network?
They've been pretty aggressive on identifying what the problems are. I think in New York and San Francisco, it's pretty clear what the issues are. Anecdotally, when we talk to different investors we deal with and customers also, it seems like it might be a bit more widespread than just New York and San Francisco. But today's announcement, I think the most important part was the capital spending guidance, where they're increasing capital spending by about $2 billion year over year. We think that will be clearly dedicated towards fixing the near-term issue in New York and San Francisco, but also building out network and fixing some of the issues across the country. All
right, I want to talk a little bit more about AT&T. Obviously, they reported their earnings today. What do you think is going to be the biggest trends for AT&T this year, Mike?
I think the key for investors in AT&T stock is to determine whether or not the iPhone relationship will be ongoing. That will have a major impact on people's expectations for new subscribers coming in. Also, it'll have an impact on margins. They've had a lot of dilution from bringing the iPhone customers on board, both from a revenue share and device cost standpoint. So if they lose that exclusivity and it goes to other carriers, you could see margins come up nicely in the back half of the year. So there's a lot of speculation. Maybe they lose that mid-year. We have no insight on that. But if that's the case, I think a lot of models need to be readjusted.
On their call, they said they see no turn in economic conditions. When do you think we might start to see that from AT&T specifically?
Yeah, that's been an ongoing theme, and yet if you look at some of the metrics, particularly on the wireline side of the business, year-over-year rates of decline for enterprise revenue has gotten better. Strategic services, sort of the new IP stuff, is also starting to turn a bit. So I would argue that the metrics are telling us that things may be getting better. Obviously easier comps from a year-over-year standpoint.
Right, that's true.
But also hearing that business customers are making decisions faster than they were a year ago.
What about that fixed line business? We heard from Verizon they're going to cut about 13,000 jobs in their fixed line business. We didn't hear any update from AT&T on that front. I mean, do you think they're going to have to make some job cuts as well in this business division?
Yeah, I mean, I think if you look at the margins in those businesses, clearly Verizon's had to cut headcount to maintain margin. AT&T is expecting wireline margins to remain relatively steady during 2010 versus 2009. So we think after cutting 20,000 heads in 2009, you could see similar cuts in 2010 just to maintain the margins. And a lot of that is related to not only pressure in the enterprise marketplace, but also the access line loss they're seeing in the consumer market.
Mike, got 10 seconds here. You've got a neutral rating, I believe, on the stock here. What's it going to take to kind of have you upgrade your rating here?
Unfortunately for the U.S. wireless and services industry, I think we're sort of forced with having to have consolidation to rectify the pricing situation.
That's interesting. Do you see AT&T being a player in that consolidation? Just quickly.
I do not. I think AT&T and Verizon stand alone. The question is the rest of the players.
Yeah, we'll see how that plays out. Hey, Mike, thank you so much. Mike McCormack,
Thank you, Carol.
analyst over at JPMorgan Chase.